For self-employed families paying full price for health insurance, Zion HealthShare can look like a lifeline. But it is not insurance, it does not guarantee payment, and it works by a completely different rulebook. Zion is a nonprofit health-sharing community. Members send in monthly contributions to help each other out. When someone has a big medical need, the community may share those eligible bills according to written guidelines rather than a contract. In 2024, Zion members shared over $75 million, and in 2025, that number grew to more than $92 million. Most of that went toward major surgeries, hospital stays, and serious medical needs that would otherwise be crushing. But unlike an Obamacare plan, there is no legal obligation for Zion to pay any particular bill. Every sharing request is reviewed against their guidelines to see if it qualifies under their specific rules. Some categories, like hormone therapy, neurodivergent disorders, or certain pre-existing conditions, are excluded from sharing altogether. Instead of deductibles, Zion uses something called an initial unshareable amount, or IUA. That's what you pay first. This is the amount a member pays per medical need before the community begins sharing the rest of the eligible expenses. As of the 2026 rate notice, a common $1,250 IUA means you pay that for a surgery or hospitalization. The rest can be shared with a cap of 3 IUAs per household in any rolling 12-month period. One major benefit is provider choice. Zion doesn't use narrow networks, so you can see any doctor or specialist you choose. You're treated as a cash pay patient, which often means lower upfront prices if you're willing to handle the paperwork. Zion also has a team that helps negotiate large bills down, ensuring the community's funds go as far as possible. Contrast that with many ACA plans, which can restrict you to a very specific set of local doctors and hospitals. Monthly contribution levels vary based on your age, your household makeup, and which IUA level you choose. For a 35-year-old single member on the Essential Plan with a $2,500 IUA, it's roughly $130 a month. But a family in their 50s with that same IUA can be well over $400 per month. Still, it's often cheaper than the alternatives. Traditional premiums are projected to increase by around 6.5% to 9% in 2026, making HealthShares more tempting. However, lower contributions come with trade-offs. Zion's guidelines include specific waiting periods and limits that really matter. The latest guidelines clarify that expenses for autism, ADHD, and other neurodivergent disorders are not eligible for sharing. Many prescriptions must meet a minimum dollar amount, and supplies like braces or oxygen masks are only shared for a limited time. If a request is denied, you can appeal to a committee, but the guidelines make clear that their decisions are final and not guaranteed. Regulators are watching. In early 2026, a Washington court ruled that Zion was operating as an unlicensed insurer. The court pointed out that calling it a health share doesn't change its obligations if it behaves like an insurance plan. Zion HealthShare is a powerful tool for some, but it requires eyes wide open. Know the rules before you join the community.